Alright, welcome to my stream. Please tell me on the comment section if you can hear me so that I can turn down the music. Tell me if you can hear me so that I can turn down the music. Just a few minutes and then we start. Thank you for being here. So let me kindly ask, if you're watching this stream right now and you're in some trading communities, if you can be able to share the link with other people, you just copy the link and then share maybe on your X, maybe on some WhatsApp group, and tell them to come to our stream so that we can watch price together. And tell me if you can hear me loud and clear so that we can proceed. Thank you for being here. So today we have some, so let me turn down the music first, then proceed. I hope the music is off now. Please tell me if I'm the only person speaking. You can tell me apart from the background noise. Okay, so today we have some news which are like, today is on Wednesday, so we have ADP, non-farm employment change. These are red folder, so it means it's a high probability. But now we have news, the FOMC statement in PM session at 9 and then at 9:30. So let me be very clear to you that whenever we have news in the PM session, this AM session, we call this AM session. Kodongi sana ndaka zero soccer, kodongi sana murume buing kamia. So so whenever we have news in PM session, when we have a red folder, when we have red folder in is it in or in PM session, normally AM session is low probability. So whenever I talk about PM session, I mean New York local time. If you're watching from Kenya, it means usiku, maybe 9 usiku sasa. No. So it means saa 10 saizi is low probability. Okay. So so what you're going to do right now, it's not necessarily for us to take trades. We can, instead of tape trading, I can just teach you something. Those who struggle with some key levels, ICT key levels, if you have some questions, we can tackle. We watch price marks, some key levels that, and then review even yesterday's trade. So I'll appreciate if you tell me in the comment section what exactly you want us to do, because I've told you already that AM session is low probability. So tell me on the comment section what you have a problem solving, or what you have a problem, what you struggle with, so that I can be able to assist you. I know some of us need to learn top-down analysis. Welcome Westy, welcome Short Fuse, welcome Nana 224, welcome everybody. Thank you for being here. Yeah. Kumbe Zero Soka we ni Mmeru. Thank you for being here. So you've said very well that let me check NASDAQ. So we can start with NASDAQ, and we try to mark the key levels and explain to you some of the key levels that ICT that are on ICT concepts. So the sell happened very nicely. So you see there's is something that we said. You see price did not react to the inversion or the premium key level. So but instead what happens, we said rule number one, if you want to take a trade, price must have reached high time frame key level And then number 2, price must absorb some significant level of liquidity. And liquidity is into liquidity. So we have external range liquidity, and then we have internal range liquidity. So external range liquidity is basically the highs and the lows, the highs stroke lows. And then internal range liquidity is mostly fair value gap. So this is it. And then you see, this is just the basic way to explain what liquidity is. So there are even some like you see, you can have trend line liquidity, and then you can have the equal highs and equal lows. So you need to understand these types of liquidity. Liquidity is where the orders are. You know, everyone knows liquidity is where the money is. But now understanding it and actually being able to see it is something else. So tell me in the comment section if you're locked in. Okay, explain the different macros that happen in AMs and PM sessions. Also, do you take trades before and during the macro? So I'm going to be explaining that. So yes, just a minute and then we proceed. Tell me on the comment section what you want us to check. Right. All right, I'm back. So I'm going to be answering your questions. So let me see what you said. So the macros don't exist. Jeremiah Howie, that is according to you. The macros don't exist. That according to you, there's no problem. So we have T1. just got here. What are we selling today? Yeah, we are mostly watching price. We might not be selling or buying anything right now because this is AM session and we have news in the PM session. Jeremiah, that is your opinion, and it's okay to have your opinion. So I'm going to be talking about the macros. Okay, this is it. So let's see. So you need to understand. Let me explain yesterday's trade and why and what exactly happened. So what do you see here? This was at some level of liquidity over here. There's no. Let me check on what key levels here. What was simply here? There are some key levels that I marked yesterday, and price did not react from this. See, this is the inversion fair value gap, and as you can see, if you are probably to take to look at the discount and premium, this inversion fair value gap was is not in the most discount, but and then there's something I said just maybe to remind you, high probability key levels are the ones that have liquidity inside. You see, so we had this breaker in a trend, and then we had the next thing is this NWOG that was here, and this liquidity that was here. I think this liquidity was is it Monday's liquidity, Monday's low. So this was sell side liquidity. So what happened? So the first time price came and generated equal lows around the Monday's low. You see? So this was sell side liquidity. And the rules are, if you want to take a trade, number one, price must have reached high time frame key level. If not that, price must have stopped some significant level of liquidity. So in this case, if you were to just review yesterday's trade, and I would not take the sell, let me not lie, as much as it was there, and I'll explain how the sell happened. I'll explain, but I would take the buy for reasons known to me, and I'm going to share them here. So we have sell side liquidity here. So the price came and raided the sell side liquidity. So the 2022 model says on entries. So the first entry is on the breaker. You can have an inversion FBG. There are those who take that. Then you can trade. You can have the breaker, the breaker, the breaker block. So what is a breaker block? A breaker is a failed order block. So when you drop down to the lower time frame, we're going to be looking for a breaker or an inversion fair value gap. So, and we've said that if you have to take a trade, let price first of all sweep some significant level of liquidity, or the price must have reached a certain key level. So this is sell side liquidity. Price took it out. So let's drop down to the lower time frame, mostly on 1 minute time frame, because on Nasdaq. So on 1 minute time frame, let us review, see what happened after the price took out the low. I didn't bother to check thereafter later because I got my sell on my buy on US30. So if I was to show you what happened after the price took out the sell side liquidity, look and see how the setup was so clean. Look and see. Look, what do you see here? We've said because we were bearish and now we want to look for bullish conditions. As you can see, this line that is here was the sell side liquidity. Okay. So what happens after the price takes out some sell side, some significant level of liquidity? You now look for the opposing side of liquidity. So what do you see here? After the price took out this low, the price generated a fair value gap, which was supposed to push prices below. And instead, what happened? So when it comes to entries, you look for a discounted key level and wait for price to violate the key level. In this case, what did we have? We had a fair value gap. See, the price was so in a hurry to deliver this sell side liquidity it left a gap. So we expect the price to come inside the fair value gap and then have resistance to the downside. But instead, what happens? The candle come and closes above the of the fair value gap. That makes it an inversion fair value gap. This is an entry model, inversion fair value gap. You see? So this now turns from the previous area of resistance into now an area of support. And you can see the first time the price came in, you can have your entry here, and then you can put your stop loss below here. So if you look for like 50 pips or 100, you would have found. So this was a very good sniper entry. Those who ask about sniper entries, because you see price header would have a drawdown of 9.8 pips. And even if I check 15 minutes, you'd see that the price went maybe up to even 50 or 100 pips after the setup was formed. So this is how you catch high quality setups. Jeremiah, be patient. I'm not giving a sell signal right now because I've said we have news at PM session. So this mostly is more of the reading and reviewing yesterday's price action. So I appreciate if you just if you just let's just move slowly. We'll see if a trade comes, we can interpret it. So if you needed like 100 pips from this level, maybe you'd have gotten them probably. Actually, the price on NASDAQ went 93 pips. On NASDAQ, I know that takes time to deliver, but I wouldn't wait for that. I would just get out with 50 pips. So now, that is it. After the price took out sell-side liquidity, that happened. So let me go. Let me review what happened on US30 yesterday. Let me review what happened so we can go to daily probably. So thank you for being here. Yeah. No, Jeremiah, you're not giving signals here. Please, just don't confuse people. So let's check what happened on US30. If I start from, mostly if you have to start your analysis from the higher time frame, which is mostly I'm going to be explaining why Nasdaq sold yesterday, and I did on my stream yesterday, but I'm still going to do that. So now there's something I see on US30 when I start on daily time frame. So the first thing I see is this. Look at what happened here. So this price took, there is X, Y, and Z. So the price took out, yesterday's price took out Monday's low and closed below with a body. So the body tells the story and the wicks do the damage. So I would have expected a bearish price action, but that doesn't work 100% because if you look here, the price took out external range liquidity, and there are some external highs that were there. If you check here, we have these highs. So after price takes out some significant level of liquidity, it seeks to fill the imbalances. So what imbalance is here is this fair value gap. See here, and you see this one. So you might have a repeat of what I like to call the internal range to external range liquidity. So this could be internal range liquidity to external range liquidity. So internal range liquidity is when the price fills a fair value gap, and then you target now the highs. Okay, so the external remains these highs over here, but now external range liquidity or the buy side liquidity, you can call that. That is it. So we are having a very strong reaction from the fair value gap. But now, if you check this candle, closed bearish, it's telling a different story from the narrative of internal range liquidity. So what will make us have a very clear bias is the news in PM session. They're going to be delivering, and we're going to be knowing after the FOMC statement. I'll still do another live, and we're going to see what's going to be happening. Jeremiah, you are selling. Good luck with that. Good luck with that. So this is the fair value gap. we expect prices maybe to go higher because of internal range to external range. So if I check US30, let me look at this candle. It's dealing range. It's, let me see what if maybe I'm supposed to sell because my buyers the candle tells us a story of a sell. Let me see if it's going to be happening. So here, this is the 0.5 of Y. So I can the best thing I can do is just wait and see what happens. But I would also love the price to take out this low, the sell side liquidity inside the fair value gap, like that. So easy. So we closed. So if I'm supposed to continue bearish, I want to see price taking out sell side liquidity, do a small retracement, and then go below. So if I drop down to maybe 4 hours time frame, if there are some key levels that price is currently reacting from, let me remove the drawings on here. Okay, thank you for being in the live. The new people that are in my stream, please leave a comment. You can tell us what you'd like to learn or what you're struggling with, so that we give quality we give quality information. Okay, so we continue. So if you check here, you can see that on US30, what is happening right now is the price is reacting from a fair value gap. You see this fair value gap? This is a bearish fair value gap. This is a fair value gap. So a fair value gap is an area of an inefficiency. And you can see price was generated some low, has some, what actually price did, it took out buy side liquidity inside the 4 hours fair value gap. Buy side liquidity inside the fair value gap. So if you drop down to 1 minute time frame, you'd see why the price is probably selling. So, but I don't have a very clear bias. What we are doing is just a trading price right now. So if maybe because the price has taken out the high, but it has not gotten into the 0.5 level of the fair value gap. But again, remember on daily we are reacting from the fair value gap. So we might have a bullish price action which could be a retracement or could be the main move. We are not very clear on that. So you can see we have a fair value gap here. Price has filled it and it is reacting from internal to external. So we expect a bullish price action. But now on daily also the candle tells a different story, a bearish story. So the best thing we can do is just react from high time frame key levels. The first high time frame key level is this fair value gap that you see here. The price took out a high inside the fair value gap. So if it is supposed to sell, this would be the setup. If I remove this one here, let me show you. This is just a reading. I'm not taking any trades. I've explained why, because we have news in the PM session. This is a tape reading session just to explain to you how the narrative is. I'm not here to offer signals, so please hope you understand. So before I explain what markers are, let me see if the price is going to react from this breaker or it is going to disrespect it. So let's just watch price, see what happens. So this could be a breaker. This is a breaker actually, because this is the last sell candle before the price took out this high. So it's supposed to offer us with support to the upside, but now this candle has closed below. So let's see if price is going to go lower. You can see it's not even going lower, it's going up. That is why I'm telling you we don't have a very clear bias, because the high time frame narrative says buy. But then this is also a 4 hours, which is also high time frame. So by 9:50 we'll have found out our narrative. So Princey, can you explain how to read bias using the daily candles? Yeah, that's what I was explaining, but then that I just told you that it is not 100%. I'll explain that to you, don't worry. But remember, we are acting from the fair value gap on daily. That is on, you see, we are reacting from this fair value gap. That is why we expect internal range to external range. That is what we expect. But it doesn't mean price cannot sell. It can actually sell, because this is a key level. So if I'm just supposed to just, my macro is not yet there, but I can just, if I can just put this here, I would have put my stop loss over here, and then maybe wait for price to sell. But remember, the macro is at 950. This is just a reading. You're just looking for narratives to see if price is going to react, which is highly unlikely, because on daily we are having the fair value gap that is pushing prices higher. So let's just wait and see what happens. The price is likely to take out this high, so this setup is actually low probability, but we are just going to see what's going to happen. I'm just reading, I'm not giving a signal. I'm just giving you reasons why you can take a trade. So we have 45 people logged in. Please, I expect that you assist me, like our live. You can say something in the comment section, because people like Prince is asking about how to that and other things. Freedom FX, H4 bearish fair value gap. Which pair are you talking about? TP hit. Jeremiah, please don't comment that, because now you'll make people suffer from the fear of missing out. Please, this is a learning session. Don't be rogue. Respect other people that are checking the comment section, and what you write on the comment section is what I'm reading here. So I hope you understand what I'm talking about. So we continue. I don't expect. I don't have hopes with this sell, but we have a setup here that could sell. The narrative is the price has reached 4 hours key level, and this could be a retracement. So I'm going to be explaining how to read US30 is a bearish sign, if evident on 4 hours. Yeah, but then freedom effects. You see the thing now. The problem with pairs like US30 right now, uh, bearing in mind that we expect some news in the PM session. Let me show you now. What makes the sell a low probability? Let me show you what makes the sell low probability. Is because of the narrative of internal range to external range. Look at this. This is the fair value. What do you expect if the price respects this fair value gap like this? You see, the body is telling you a serious story. Look at this. The price has actually closed around the 0.5 for the consequent encroachment of the fair value gap. So you expect support to the buy side. You see? So that's why I expect the price to keep going up. So on 4 hours, I know, but now let me ask you, who do you trust? Do you trust 4 hours or do you trust daily? So yes, we have this fair value gap here, but then we also have an order block over here. Look and see what's happening here. That's what I'm saying. The sell could be, but it's a very low probability. And then we expect some trend continuations. Look at this. This couple of the last buy candles before an aggressive sell that swept sell side liquidity. This makes these ones order blocks. You see? So this is some sell side liquidity that was taken out by price. So between now this fair value gap and this order block, which is in the premium, it is the order block. And we say that we sell at premium. We sell at premium and then buy in discount. Yes, the setup might work because this is also a key level that is a high time frame, but price is likely to go higher. So that is what I expect. You can keep check Nasdaq. Yes, I'm checking Nasdaq, Chris. Yes, Jeremiah, I understand. I think maybe it's your first time in our life. Welcome, welcome. We appreciate your presence. We don't take anyone for granted. Yes, I'm checking Nasdaq. So I hope Freedom FX, if you have another question to ask, I'll be happy to respond to it. Okay, let's keep checking. So I've said the price can react from this fair value gap, go lower because it has swept some significant level of liquidity. But then again, we have this unfilled fair value gap. It's not fully filled. And then this is the most premium key level. And then we also have an inversion over here that is coupled to these order blocks. So that is my narrative. That is how I like looking at price. That is how I like looking at price. I'm checking Nasdaq now after this one. Yeah, I've said the sell can happen, but it is low probability. I've said it is low probability because we have a higher key level that is up there that price is likely to react from. Yeah. When Paul, NAS buys after taking a standard range liquidity and tapping into the end dog. Let me check NASDAQ. Just a minute. Just a minute. For those that I'm not used to looking at price, this is how we interpret price. We just look at narrative and then we try to build a story into it and know if this trade can play out. Is it likely to go very well? Is it likely not to? So yeah, what I'm offering is not signals. I'm just trying to help you build stories with your trading. Just a minute. So I'm back. I'm back. Uh, Tuesday is a high on the week NAS. There's an equal low formed on 1 minute chart. Maybe price will take out before buying US30. Let us just see what is happening over there. So this is what I'm interpreting on US30. Currently it's at how many pips? Let me check. This is 60 pips. My friend, you know how what 60 pips can do to your career. So let me check on NASDAQ what is happening over there. I can do a top-down analysis over there. NASDAQ. So let me check on 4 hours what we have. So the price took out the liquidity and now it is going bullish. So now you can see what we have on NASDAQ. I can see an inversion fair value gap here. This is a key level and then there's a liquidity inside it over here. So price has taken out the liquidity. So now I think it has actually formed a buy setup. As you can see on NASDAQ, what is happening is, let me show you. So NASDAQ is currently having a break actually on 1 minute time frame. So we are just a breeding price. So if you are confident on what you're doing, so this is a breaker. This is a breaker over there. So if you are supposed to take any, if you are supposed to take any trade, it is from the breaker over here, and then long it. Let me see the risk involved. It's like 30 pips. 33 pips is quite huge. So you need something like 100 or something. So longs maybe after the price took out another 950 macro is almost actually. So let us see. So if you have 33 pips stop loss, then you need something like a 60 or 100. So I wouldn't take the trade on either, but I'll just watch price. So mine is just to assist you understand what price action is actually doing, or what is likely to happen. Yeah. So you can keep the questions coming on the comment section. I already tapped the 50% of the dealing range. What dealing range are you talking about? Achi, are you talking about Nasdaq? So you can bring the questions that you guys want to. You guys have. Okay. So there's something I've told someone. I'm saying something. Let me explain again. When you start, I am not buying. I am not buying US30. I'm selling. And the reason why I'm selling is simple. It might not be a plus, but I am selling. There's someone in my DM asking a question. What I'm simply saying is we have a fair value gap here. And the price has took out some significant level of liquidity inside the fair value gap. That is why we are experiencing a sell. And if you look at what I've posted there, I'm expecting a sell. But also remember that we also have a more premium key level that is around this order block here. You see? So if maybe I look at this dealing range of US, that is from this swing high to this swing low. See, price is not even at the 50%. The 50% is here. So I'm saying my sell is actually in play. It's actually in 60 pips into profit, or the way I'm reading it. But the thing is, it doesn't mean it can't happen. You can see I'm having this one. It's actually hitting my take profit on my almost hitting my take profit. You see, this is what I'm having. And I've explained the price took out buy side liquidity inside a fair value gap. That is why I'm shorting it. It could be short term, but it's playing out. This is a good trade actually. You see, you don't have to trade with the daily bias. What you just need is something like a session bias or something. Session bias if you're a scalper or if you're intraday. Yeah. No, I'm not Marvin. Marvin is not here today. So US30 lower price, that one meeting holding the sell. That 1 minute fair value gap. It's not the fair value gap that is holding price. There's a breaker. You see, I'm not trading using fair value gaps because look at the spikes that happen. The price, yeah, it's holding, but now this, if I want to sell, I mostly look at the bullish key levels that are failing here. Price closes below. This is actually a breaker, and I said that, and I said it. This is a breaker. Breaker is a failed order block. Okay. This is what that is what is happening here. And we've been within when I was trying to sell from actually up here. So I said it could be short term, but it's still playing out. You see, it's very successful actually. Playing out very nicely. Marvin, kumbe wilia hapo. Wilson bana. There's a rock trader who is forcing a Nasdaq sell. Let me see what's happening over there. There's someone that his name is Jeremiah. Let me check if your sell is still happening. You see, this is what is happening on Nasdaq. So I'm sticking to US30 because this is my thing. You see, it's delivering actually very well. This is almost 100 pips. You see. So just to touch something on the macros, because I know that some people need to understand what macros is. So a macro is a small kill zone where spooling happens in price. So it's a kill zone. So let's say, you see the thing, I think in high school you learned about a story within a story. You see? So now, let's say in New York session, we can have a smaller kill zone that is inside a New York session. For example, you'll not find these on the sources of information that you find, but there's a macro that is here, a 920 to 940. This is not an ICT macro. Let me tell you. ICT says that a macro is at the top of the hour, okay? So at 950 to 1010 there's a macro there. You see? But this is, to me, this is a macro. This is I have back tested this, and I'm not saying this is an ICT concept, a macro. ICT says it's at 950 at the top of the hour, okay? But this works for me. Many people will ask, how are you using that as a macro? But there's a macro here at 950 to 1010. So these macros, there's something you need to know. What happens is it can either be a trend continuation, it can be a trend continuation or a reversal. So now, how can you the difference between a trend continuation and a reversal? I'll be explaining in that very shortly. But let me tell you something. Whenever it comes to when it comes to 950 macros, Jeremiah, it's okay. If they don't exist, that is according to you. We said you don't have to come and what you're doing is you're spoiling our life. Just if they don't exist, that's your opinion and that's okay. So I'm in a class, so you don't. If you want to teach that they don't exist, that is according to you. There's no problem. I don't have a problem with that. But according to me, they exist and many others who have been interpreting this price. You see, this is not luck that happens. You see now the price has delivered successfully. So if you want, if let me tell you this, I have backtested this many times. If the price sweeps a single swing, I expect trend continuation. If the price sweeps some equal highs and equal lows, I expect a reversal. That's what I'm telling you. Equal highs and equal lows. So that is why sometimes you'll wonder why price has taken out. You know that people trade, they have a strategy of previous day high and previous day low. I'm sure many times you've seen price take out previous day high, previous day low. If it has taken out previous day high and it continues to buy, then how do you explain the concept? You see, it's a trend continuation for the next day or for the session, depends. A reversal, the price takes out equal highs and equal lows, and a serious reversal happens. For example, on US30, let me show you on weekly time frame. Let me show you on weekly time frame. Price took out some very significant levels of liquidity. Let me show you. What are these? These are external range liquidity highs, equal. They are equal highs here. You see them, and then there are other equal highs over here. So after the price takes out some equal highs, the price reverses. You see? But then a single if now if why didn't, because price took out this previous day high here, why did it continue going up? You see, that is the concept. You need to learn this. Okay? Because look here and see, price took out this single swing here, did a small retracement, and then continued lower. That is the concept that you need to understand. Okay, so I'm continuing to explain what macros and are and what and how I actually trade them. Uh, so that is it. This trade has successfully delivered to my take profit. How I was actually and still I'll still explain why I was selling. That is 115 pips. Let me explain to you why I was selling. What is happening on Nasdaq? I don't know. I Can you advise someone to trade gold using this concept? These concepts actually work everywhere, but now the difference is that the difference comes on the price action. You see what happens with these pairs, the indices. The price action is actually clear. It's very good. But now the problem with gold can do a series of uh, I'm going to brag. Gold actually can do a series of stop and then by the time it goes, this guy is not here. Jeremiah, let me not limit you. Okay. Okay. Gold can kill you. Yeah, yeah, yeah. You'd be in serious problems if you trade gold without a good skill set. But it's okay. But I wouldn't advise that you use macros on gold. But then if I was to check gold for you, let me check what's happening on gold. There's some people, I saw a very serious consolidation. Let me check. And then I come explain to you why I was telling you US30 and what I actually expect. You see now, this is it. Actually, the guy who was asking about this thing, look at what happens. We had a single swing that was here. When I told you about a reversal, you see, all these concepts depends if you are a scalper or a swing trader or what you are. The price took out this single swing. Yes, it reversed, but what is happening? Look at now what is happening. This is a trend continuation price because price took out a single swing here. You see, what do you have here? A series of buy candles before an aggressive sell. So price rated this liquidity that qualifies this one to be an order block. You see? So now the price comes. You see now what gold did. There were a series of there was a serious consolidation. 1, 2, 3, 4, 5. This is almost like a whole day of consolidating, and then price just decides to expand all of a sudden. You see? Now that's what I'm telling you on gold. It's not something you can joke with. But you see, this is what's happening here now. Price is actually reacting from this level. So let me go back to US30 and explain to some people, to some of the people who needed to understand about the macros, US30. I have not done a top-down analysis on this pair. What do we call it? I've not done a top-down analysis on Nasdaq. May not be the best person to give you a bias today. But again, remember we have news in the PM session. So that makes AM session to be low probability. So now, let me remove all this and then I explain again. I believe we have some people who are new to our live that were not there. So, okay, what's going on? This guy is wrong. So now, let me explain again what is happening on plus 30 and what exactly has been happening. So price took out this sell side liquidity here, and the price on daily got into a fair value gap. So technically what we are having here is now previous day low. See, and the price has taken out the low, so that's why we're having a very strong upward momentum. So the price has taken out a low inside a fair value gap. So we are supposed to go from internal to external, but now the story says something different. Price closed below with a body. That is the story. We are bearish. That's why I was selling on 4 hours time frame. But then the target, my target has been hit, which was the previous day low. That is why we are having a strong a buy that is currently in play. So if I go to 4 hours time frame, what do I see? This is actually another internal range, internal to external. What did I have here? Is a fair value gap. So there are some two key levels that I can see. We have this order block here, and then we have this fair value gap over here. You see it? So what happened is price generated a fair value gap and actually generated buy side liquidity inside the fair value gap. See what is happening. So we have this high inside the fair value gap. So after 9:30 delivery, I don't know if it's after 9:30 or before, price raided the high inside the key level. That is why I was selling, and my trade went very well. So, but then I was again explaining that the price is from a daily fair value gap, so it's supposed to go up. So again, I said you might sell here, get a trade, but then if you're not a scalper, you might get taken out because price might decide to come all the way up here, up to this order block. And after price has rated this previous day low, if you can check on 1 minute time frame, you will find a buy setup actually. You see, so if you wanted to buy after the price took out the previous day low, there is a breaker here. You see this breaker now. Let me mark it. That is what I would have. That is what I'm seeing. But after the price took out the high, I sold and it went 115 pips. That is according to me. But then I'm saying the price might decide to go higher because it has taken out previously low. It could be a short-term buy, but it's still a trade. You cannot say that just because this trade was 115 pips, it's a good trade because where do you get 100 pips that fast? Because this was in like I think is it 20 minutes up to down here. This is 19 minutes. You see. So that is it. Let's remember that we will have news in the PM session. So you have to trade carefully on AM session. This is AM session. So Marizona Jerry. Okay. Okay. Saina Soma what Lord is teaching. Okay. No, nice. So Steven, that's cheating. Tulisema tunangoja 9:30 open. Let me tell you, you know, sometimes we make rules and then break them. We wait for 9:30 delivery, but it does not mean that maybe the London macros don't. They can actually work very well. You see, that is the thing. You don't have to follow the rules to the letter. If your system works, you can even take a trade at the close of the maybe at saa sita ya usiku ama ni saa nane sijui. The concept just works, but if time allows it time makes it high probability, that is it. So by the I finally understand the concept. Right, Macaulay and Marvin nashukuru. Macaulay, kindly drop that photo gem on manipulation at 9:30 and how to trade them. I'm going to explain what I expect on 9:30 mostly. I might not know what exactly you're talking about, but I'll try to explain. Sometimes the setups are too good to miss. Yes, sometimes you want to trade at before 9:30. The setup has formed. It has all the A plus conditions. That is why I round off to the nearest macro. That's why I'm telling you I'm having a macro at 920 to 940. And mostly that macro delivers for me very well. But I'm not telling you to trade it because that is not an ICT thing. That is someone else's concept. So redo the NQ AM trades. I didn't do the NQ. I was just but I can just check for you. Cheat code, mark the highs and lows of 8:30 New York time. Wait for 9:30. Take out one of them. What matters football is thing. This is just time-based liquidity. You see, this time-based liquidity. Maybe the London highs, the London lows. You can even have lunch hour. You see, it depends. It's still liquidity. They could be 15 minutes kill highs or lows. So the thing is, you need to understand the concept of the highs and the lows. Jeremiah is back. I'm going to ban you from my life. But it's okay. Anyway, we proceed. We proceed. Thank you for having you guys here. So the cheat code mark highs and lows of 8. The thing is, let me say this very well. You cannot get it wrong if you're using highs and lows and the fair value. You cannot get it wrong. It's highly unlikely. And then you had some, because liquidity, if you don't understand liquidity, then you're in some deep problems. So if I'm to check what is happening on Nasdaq, I've not done a proper top-down analysis on what is actually happening. But if I'm to check what Nasdaq is happening and explain according to how I can see it, let me say this. These were my markings from last week. Okay. Someone text me on my DM. People text me on my DM when I'm having the live. So if I was simply to explain what according to how I understand whatever is happening, and if what I'm telling you, if you get it right with highs and lows and fair value gaps, you will not have problems. You see. So now what happened yesterday is this inversion fair value gap was not in discount. As much as maybe we would have wanted to buy, this would not be the high probability because we still had some unfilled fair value gaps here. And we still that unfilled fair value gaps are targets. So the price must have gone, that's why the price actually went all the way to the discount key level. So what do we have now? We have lows here. So see what happened, how interesting this is, and even how the sell maybe appeared. So we had the lows that were here. So the price took out the lows, and then the price has been bullish after it took out the low. So in simple terms, the high quality setups are the ones that are involved in the liquidity being swept. If the highs and lows have been taken out and they are aligned to some key level, then you will have a quality setup in play. Trust me, I've tried this and it's tested, and I'm not the only first person to do this. Okay, now let me continue on Nasdaq and what I see. So the price took out the Mondays. I think this was Monday's low, and the price has been bullish. How do you catch the buy? The entry model is simple, just like Thanos tells you. You need to look after the liquidity has been taken out. Now look for change in state of delivery, like the ones CSD says. I don't know how it works on his side, but I know look for a breaker. So a breaker is simply a failed order block. So if a failed order block, if the order block in this case was supposed to offer us with resistance and it fails, it now becomes a support key level. Look at this. What we have here is the last buy candle. You see this last buy candle is a small candle here. You see the last buy candle before the price took out this sell side liquidity. And then we have another discount key level that is here. We have a fair value gap here. Look and see what happened. So this is what I like to call advanced market structure shift. The price, this is normally used to reduce your stop loss. So the price, the first key level here is the inversion fair value gap. How is it an inversion? The price closed above with the body. So that makes it a now an area of support. The price goes in, goes out. We also had a breaker here. I know some of you might underestimate a small candle, but it's so powerful. Let me show you. This last buy candle here, before the price took out that single swing high on Monday, is actually a breaker, an order block. Look at what happened. The price, the first time the price mitigated the order block, showed some small resistance to the downside as it was feeling the inversion, and then the price came and closed above the order block. That makes it now a breaker. And you can see the retracement inside the breaker. Even if you put your long position here and then put your stop loss over here, you still be able to make a good RR. So if we check on 4 hours time frame, what is happening, we have another key level here. You see, you don't even need daily bias. Sometimes you just need session bias. You see what is happening here. What do we have here? Is a fair value gap. The price is in a hurry to deliver sell liquidity, so it leaves behind inefficiencies. So the price will come, fill the gap, and then continue the trend to the downside. Look at this. This is a fair value gap here. So the price generated buy side liquidity inside the fair value gap. Can you see it here? So the price takes out the high, reaches the consequent encroachment of the 4 hours fair value gap. This is H4 FVG. So the price has taken out. Now this could be maybe London highs. I don't know. Oh, this is 2 to 5. Is it 2 to 5? The London starts. There's a silver bullet 3 to 4, and then the kill zone starts at 2 to 5. So this, if you call this London high, I don't know, but it was at 2. See, so the price takes out the high inside the key level. That's why you're having a very strong reaction to the downside. How would you catch the sell? If we check on 1 minute time frame. So now after the price raised the liquidity level, see what's happening here. And be careful, price generates setups on both sides of price. I'll explain to you why there is also a buy setup here. But now the thing is, we are from a fair value gap, the 0.5 level. So we are probably expecting to go bearish. So if I would go by anything by that, we have now. So now, if you are bullish and the price has taken out a high and you want to sell, you look for the previous areas of support and wait for them to fail. So what do you see? What do you see? What you see is what do you call it? This is the last sell candles before price went bullish. You see? And the price will form setups on both sides of price. I'll show you even how the setup to buy. It's actually there. But now look at this now. Price, this was an order block. Price comes and closes below. So it automatically becomes a what? It becomes a breaker block. So this is a breaker. So you could short to the sell. But now again, if you check on 1 hour, there's something you're going to see here. So that's why I'm telling you, you need to know what type of a trader you are. If you are a scalper, or you are whatever. So we also have an inversion over here. See, price comes, takes out the low inside the key level, and it's been long, and it has not violated the low. So we need to maybe sometimes you need to learn how to know. You know, your bias could be a buy, but now it sells, takes you out, and then buys. You need to understand what type of a trader you are. You don't need daily bias to be able to put trades. What you need is a session bias if you're a scalper. That's why I was explaining. The same thing was happening on US30. There was a sell that happened that was so beautiful actually. Let me show you. The same concept on 4 hours time frame. The high inside a key level. You see? The price took the high. You see? Let me show. So the price took out the high inside the key level, inside the 4 hours fair value gap, and it generated a breaker. Look at what is happening. We have the last buy sell candle here before the price took out the buy side liquidity. Guys, if you check how when we were starting the stream, I was saying my bias is sell, but it does not mean it does not mean after it takes out this sell, it will this low, the previous day low, it will continue selling. It doesn't matter. I can take any trade even if it's a retracement, and I'm going to win it. So the price closes below the order block, stands it into a breaker. I put my short position here, put my stop loss over here, and it delivered 115 pips. So now you see this line that you see here, this was the previous day, because I'm telling you, price generates setups on both sides of price. It's it now to look at who is stronger than the other. You see? So now what do we have here? Look and see. Price took out the previous day low inside the fair value gap. That is why we are having a buy. And that's why I marked this the last couple of buy candles over here before the price went bearish and took out the sell side liquidity. So the candle comes and closes above. So it means it turns into a breaker. And we had a reaction from here, and the price is going up. So this is a sell setup, this is a buy setup. So it's you now to know which is easier for you. So I could not have bought here because price has got liquidity down here. But I can buy from here because price has swept significant level of liquidity at the previous day low. You see? It's as easy as that. ICT model. But you told me to buy on that bullish breaker. Come on. Are you talking about NASDAQ or US30? NASDAQ, you see, NASDAQ, US30 is still reacting. And listen, you know, this guy is very talkative. Jeremiah, let me tell you something. You need to know that I'm not offering signals. I'm just helping you frame a narrative and understand how you can take trades. You see, this is it. The breaker is there, but without the high time frame narrative, then you see on US30, my sellers actually happened very well, and even the buy after the price took out the previous day low, it's going actually up, and I would have my stop even if I don't want this last large candle. I can even take this last buy candle before the price took out this low. It's still a breaker, and you know how funny this thing is. You know, let's say from here I risk, like, you see, it is at 52 pips. Not everybody is okay with that drawdown, but still, you see, it's at 57. So this is a win-win, a 1:1. You see, so if I go back to NASDAQ, see who is winning, the same concept I was doing on NASDAQ, on US30, sorry. Look at what is happening. This is what I had. I told you to buy from here. It has not even violated the law. But what I'm explaining is price is reacting on both sides. This is a breaker to the sell side. Okay. And why is it selling? It's because price has reached a high time frame key level. Again, remember, in the PM session, we will have news. So that makes AM session low probability. So you have to approach everything you're doing with care. Okay. Share the notes, sir. I don't know if I can share the notes. You can just follow me on X and then we're going to. Okay, Demetrius, welcome to my live. I didn't know you'd appear. Thank you for being here. Okay, perfect. Matters football. Marvin, did you use the 934 AM fair value gap? Lot of merchant, but you told me to buy. Okay. Welcome, Demetrius, to our live. Thank you for the support. Thank you for the support. Thank you for the support. I don't take it for granted. So this is it. Whenever we have news in the PM session, expect low probability conditions. But now after the news, we will come back to this live. You're going to look for nice trades because price maybe, let's say for example on US30, the price will come all the way to the maybe to the order block and then sell, or reach a key level faster. You see, look at what is happening. If you, let's say if you are selling and you are in profit and the price went up to 115 pips and you're still holding your sell position, you say that you're wrong, but you're not wrong because the price delivered to the liquidity level, the previous day low. So formed a setup and it's there. So it all depends with the type of a trader that you are. You see, Nasdaq has not delivered on the sell side, so I'm not sure on the buying, but also I can be sure on the sell because the price is on sorry on US30 I can be sure on the buy because the price has swept the previous day low. On this previous day low, what is there? There's a fair value gap. We said that key levels are high probability whenever they have liquidity inside. Not just fair value gaps. You see a couple of people trading fair value gaps and order blocks. Those are very no, that is dump money. You need to look for key levels in price, like this one now. Look at what is happening here. The internal range to external range thing. This is the fair value gap, is a key level. The price comes, closes inside the fair value gaps, so but doesn't buy immediately. You see, because it knows that there are people who bought from here. So you have to wait for price to deliver from here to take out the low first, and then you can buy. So if the price took out the low, come back to 1 minute time frame. Look for your model, ICT 2022 model. The price violated the previous area of support, which is what this, or you see this order block, the last buy candle. I know some of us might underestimate the small candle here, but it's so powerful. Once this candle came and closed above, it became a breaker. You can see the retracement inside and the price is reacting. But you see on Nasdaq it's not as clean as it is on US30. Look at this. You see these two lines I have here. These are liquidity levels. And once price took them out, there was a serious reaction from that level. Yeah. Please say something on the comment section. Do you wait for market structure to validate a liquidity? No, 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 no. A liquidity sweep, my friend, even if I mark it on 1 minute time frame, on daily, even if it happens on 1 minute time frame, it's still valid. I don't validate market structure. Do you wait for wait? Do you wait for market structure shift to validate a liquidity? I don't do it like that. If the price has swept a high or a low, that is enough liquidity that has been swept. What makes my valid market structure is having a stop hand. So if there's a stop hunt that has happened, it makes my setup high probability. So for example, let me explain what I was saying here. This is liquidity level. You see I don't know if it's we call it horizontal or vertical. This is the horizontal, right? Or the horizontal. So on this horizontal line that you see here, there is a high inside a 4 hours fair value gap. It's a buy side liquidity. So you see it now on 1 minute time frame. The price comes, takes out the high. That is a liquidity sweep to me. You see? So now I start looking for a shift in market structure. Why is it? Look at this. The last, leave alone that actually, the last sell candle, this one candle, or even this one actually, this one that looks like Nundo here. This is the last buy candle or this or sell candle or before the price took out the buy side liquidity. Price is supposed to violate that key level because it's an order block. Doesn't matter if it's one. ICT says an order block is the last candle or a series of candles. It could be one candle or a series. Don't underestimate the 1 minute time frame because you see small candles there. No. Dear trader, welcome. Thank you because you've kept your word to come to my stream. Very good information. I like the process. The process. Keep it burning. Yes. Yeah. So I have some very big people on my stream. We have Demetrius, we have Thanos, we have Dear Trader. Dear Trader, you should expose me as a scammer. I'll be very happy for this. So let's continue. So after the price violates the order block, it now becomes a breaker. So that's enough shift in market structure. You see? So that's how you put your short position over here. And then put your stop loss above the high. And then it went to the sell side. So what is this level that is the blue is the previous day low. On high time frame, it is the previous day low inside a fair value gap. So the price rates the level of liquidity, takes it out. So now, after the price takes out the level of after the price sweeps the liquidity level, you now look for shift in market structure. How is it done? Look for the previous area of resistance and wait for it to fail. In this case, we had an order block, the last buy candle before an aggressive sell that took out the previous day low. Wait for price to come and close above. It has happened, you see? And then now wait for retracement. After every displacement, there's a retracement, you see? And the price has delivered on both. So if you are an intraday, maybe you would not be able to trade these setups because if you're holding the sell, you'll be messed out. You'll see profits and then the price takes you out. If you see now, but now this one looks more promising because it is expanding more because it has swept some very huge significant level of liquidity. There was someone that was asking about the fair value gap and the thing. So now what I was telling you, this is an unfilled fair value gap. You see now price is coming to this order block up here. And this fair value gap was not the most premium. This order block is the most premium. So we might have a very good sell from here. Or even the price can decide to come up here. So the thing is you just wait and see what happens. This is what you call trading. Trying to understand how you're doing the keep up the teaching process. Let me tell you something. If you read price, you'll understand it better. You're not going to have problems. So if you can ask some more questions on the comment section, I'll be able to respond to them before I can end the live. So please ask some questions on the comment section. Take care. FOMC and NFP, exactly. That's what I'm telling you. We have news in the PM session. So this AM session becomes automatically low probability. But even with the low probability conditions, well, the breeding we have seen some very nice setups happen. Before I take a small break, let me check what is happening on NASDAQ. My break is just 2 minutes, and I'll be back definitely. Look at this. Look at what is happening now. I think this is what I think. Don't know if you call this SMT or what. The price did not take out the low on this. What do you call this? The price did not take out the low on Nasdaq, but on US30 it took out the low. You see, I'm just helping you frame the narrative. You see, this one took out the low and the other didn't take. That is it. So if you have questions, you can ask them on the comment section. If you want me to greet you on my live, you can tell me as well. I'm going to recognize everyone. Pair 5, thank you for coming to my stream. I think it's the first time you're here. All right. So I'm taking questions right now. If you have a question to ask, I am here. I'm going to respond to all of them. Thank you for being on stream. Actually, I'm even considering doing a. I'm actually considering doing a stream. Why do you call someone Wama breaker? It's not. I don't think that is polite. That is not polite. So if you have questions, now would be the time before I end the stream. There's some people who want to know something who are struggling to understand something. If you have a problem, please ask. Allow you to take notes of liquidity sweeps into the key levels towards session. Let me tell you the truth. I keep it so simple that someone would think this is luck. You have to make your trading simple. You have to simplify your trading so that you don't get confused on the way. Liquidity sweeps into key levels towards. I mark all liquidity levels, not just key levels. I mark whether it's on the session open or the close, or the lunch hours or the random. Those are liquidity levels. That's what I'm telling you. If you understand liquidity, you're not going to have problems. So I mark all types of liquidity, every one of them. So I'm about to end the stream. I'm waiting for some questions. If there's no question, we might do the stream later when the news come out. So thank you for tuning in. It's been a great session, and I'm going to be doing this live every day. So you're welcoming everybody. Welcoming everybody. Patrick.